The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, and thank you for joining us for today's webinar, Building a Sustainable Legacy Through Impact and ESG Investing. My name is Ruth Jones and I'm Global Markets Director here at AVPN, a unique funders network committed to building high-impact philanthropy and social investment market across Asia, with more than 500 members from 31 countries. We're very pleased to bring you this opportunity to hear from two experienced and insightful guest speakers today. Fumi Sugeno is Senior Officer, Japan Social Impact Investment Foundation. Fumi currently develops and leads investments at the foundation with a mission to build Japan's impact investing ecosystem. Prior to joining the foundation, Fumi was an ESG analyst and business consultant at the Japan Research Institute, supporting Japanese corporations to initiate impact businesses. She also worked as a credit and operational risk officer at Dexia Credit Local Tokyo office. Fumi began her career as an international NGO staff member working in education in rural China. Daniel Madhavan is the CEO of Impact Investment Group and a long-time leader in Australia's impact investing movement. He had a distinguished 12-year career at JB Weir and Goldman Sachs JB Weir in roles including Chief Operating Officer, Head of New South Wales and Acting CEO. He was the first CEO of Impact Investing Australia. Fumi and Daniel, it's great to have you with us today. Unfortunately, Alex Chua from Trace is unable to join us today after all, but we'll have the opportunity to hear from Fumi and Daniel and move into your questions at the conclusion of their presentations. Please type your questions into the question box. We'll save these till after the presentations. Let's get started. Next slide, please. Let me set the scene by sharing key facts and figures about the ESG investing landscape generally and in Asia. Next slide, please. ESG investing consists of risk management and value creation. In risk management, it overlaps with competitive market returns. In value creation, it overlaps with impact solutions. Across Asia, stock exchanges are requiring listed companies to report on ESG performance. ESG is becoming a market imperative. Next slide, please. It uses two lenses. The first, do no harm. The second, consider your investments in light of the value you create environmentally and socially. This graphic shows where ESG and impact investments fall within the investment continuum. Next slide, please. The good news is that the ESG market is growing rapidly. A key reason for this is that ESG-aligned funds perform better than or on par with non-ESG funds. ESG investing has thus become a prudent investment choice. The millennial generation wants products that have a positive effect on society rather than just offer a personal financial return. Next slide, please. Now let's look at Asia's ESG investing landscape. Let's look at the figures in the box. Before 2015, we did not have disaggregated figures for Japan. From 2015, the standalone figures for Japan show its outsized influence on the market. Once we take out Japan, the percentage for Asia drops dramatically. Next slide, please. Here you see the growth of ESG investing in Japan versus growth outside the country. Growth in Japan is driven principally by the Japan Government Pension Investment Fund. Next slide, please. A quick snapshot of ESG and impact investing trailblazers in Asia. Japan's pension fund is the world's largest asset management fund, so it drives the market. China is moving into ESG investing, especially through ESG indices. Hong Kong's Green Grant Scheme provides subsidies to ESG investments. And Singapore's has a green bond scheme, and all companies must report on ESG performance as part of their standard corporate reporting. Now I'm going to hand over to our first presenter, Fumi Sugeno. Next slide. Oh, we have the next slide. Over to you, Fumi.
Thank you very much, Ruth. Thank you for your great introduction. My name is Fumi Sugeno from Japan Social Impact Investment Foundation. We call ourselves SIF in short. So today I would like to introduce how SIF uses impact investing and different financial schemes within impact investing to achieve our social mission. Next slide, please. So before I start talking about what we do as a foundation, I just wanted to give you a brief introduction about what Japan as an impact investing market looks like. So actually we do annual survey to impact investors in Japan, and our annual survey just came out this week. And as you can see, right now our survey is not exhaustive, but we have at least 3,440 million US dollar for the market. So the market size is still small, but growing rapidly. We saw a 5 times growth in the market. And the growth was mainly caused by the further participation by mainstream financial institutions, such as insurance companies and asset managers, who regard impact investing as the next step from their conventional ESG investment. And we expect the market to grow in the future further because we see not only a growing appetite from investors like this, but we also see huge potential for demand. Well, first of all, Japan faces unprecedented challenges such as aging population, which also represents an opportunity for social innovation. And we definitely see increase in entrepreneurs who seek social values alongside financial ones, especially the young ones. We call them social natives who don't really differentiate their financial goals from their social goals. And we think as a foundation has a unique role to play to support Japan's impact investing market to grow further in the future. Next slide, please. So our foundation, who we are, our mission is to build an ecosystem for impact investing in Japan. And we were founded in 2017 with the support of the Nippon Foundation, which is the largest philanthropic foundation in Japan. So we're still pretty new. So to give you a little bit of the background, the Nippon Foundation started researching on impact investing as a new approach for their philanthropic mission in 2013. And it came to the point that they realized that it's necessary to have an independent foundation and give a specific mission on impact investing. I just wanted to clarify one more thing, is that we're making impact investments from our program assets, which are mainly grant from the Nippon Foundation, which means that we're not making investments from the endowment. Next slide, please. So what we do in order to achieve our mission, we have 3 main programs that we run. The first program, we call it Fund Program. And what we do is we co-develop key impact investing schemes with partners, provide risk capital to stimulate co-investments, and provide non-financial support. So to demonstrate concrete examples, what impact investments are. Our second program, we call it Hub Program. There's a huge lack of intermediaries focused on impact investing in Japan. So we provide financial and non-financial support to intermediaries and try to connect various players and build communities and nurture the ecosystem. Our third program, we call it Think Tank Program, and we do research and advocacy, policy advocacy. And today I'm going to talk about a couple of cases from our fund program, which is a concrete impact investing deals that we have done. Next slide, please. So when we make investments, we look into 4 criteria, which represent what our goals are, what we want to achieve through our investments. The first criteria is impact investment ecosystem development. So whether through this investment, whether we are making any contribution to building missing pieces of ecosystem. The second part is we, of course, look at the social and environmental impact of our investment. The third one is financial return of the investment. And the fourth one, we're more and more emphasizing on looking at this, is to see what our contribution is in the investment. What is our added value? Does it really need to be us? So in sum, our most important goal is ecosystem development. And at the portfolio level, we are impact generalists. So we don't focus on specific impact themes at this moment. We are also impact first investors. But for each investment, we seek various financial returns from market rate to concessionary rates because we would like to demonstrate different types of impact investing projects in the market. Next slide, please. So the first case I would like to share with you is our first investments that we made in Japan's first social impact bond, which is social impact bond for preventing chronic kidney disease. So our foundation played both roles as an investor and as an intermediary to bring all stakeholders together. So just to give you a little bit of background about the social challenge that we're facing, with rapid aging, Japan's public medical insurance system is under a huge challenge to be sustained as it is. And treating chronic kidney disease, especially dialysis, is very costly for the government. So this company called DPP Health Partner has a very effective health education program targeting high-risk population. So the city government commissioned to this DPP Health Partner, the service provider, with a promise that they will pay them when they achieve certain 3 outcomes, such as prevention of kidney function deterioration of the program participants. Now, SMBC, one of Japan's largest retail banks, and its high net worth individuals, and us, made upfront investments as private investors. And the investments were divided into 3 tranches, and we took the first loss position with the highest risk so that other investors can come in with relatively lower risk. Next slide, please. So this project is still ongoing. It's the 3rd year, but so far the project is outperforming and has repaid its investors except us. So we are expecting our repayment in 2020 if the program proves to be effective in preventing participants' kidney function deterioration. So now, after nearly 2 years, in Japan, we introduced 10 SIBs, social impact bonds, and also about 20 in pipeline. And our foundations involved in most of them. So I think as a foundation, we played a role in increasing the social impact bonds as a whole in Japan, and also especially increasing the central government's interests through demonstrating concrete examples and supporting intermediaries and advocating supportive policies by being appointed as an advisor for the government's working group on public-private partnership. Next slide, please. I just wanted to give you one more example from our investment that we're actually preparing right now. We're now launching an impact investment venture fund, which are co-managed by Shinsei Bank Group and CFR Foundation. So I think this will be Japan's first impact investment fund, which are co-managed by mainstream financial institution and a philanthropic foundation, and also open to institutional investors. Actually, can you jump to the next slide, please? So the fund will focus on childcare, elderly care, and work-life balance related businesses. And the reason why is, as I said before, we are entering super age society, and everybody's facing the severe labor shortage. It's all Japanese companies' concern. And there are two major life events that make people leave the workforce or prevent them from joining back to the workforce, which are childcare and elderly care. And also we need to change the way that we work and also design our work life and personal life. So this is the reason why this fund focuses on childcare, elderly care, and future of work solutions. Can you actually go back to the one slide? Thank you very much. So the fund, the target size is about 30 to 50 million US dollars. And the target financial return will be market rate. So what we are trying to do here is to launch a fund which is going to be investable for institutional investors. And also, as a foundation, our role is to integrate impact measurement and management throughout the investment process, starting from sourcing, due diligence, and post-investment value up and exit. Next slide, please. Next slide, please. So I just wanted to conclude by just sharing with you some of the initial thoughts that I have about challenges that we are facing and the future strategies that we're thinking about. So the challenges that we're still facing is that, yes, we are seeing early adopters, but still overall in general, the awareness level by investors, intermediaries, and businesses, and most importantly by the public remains to be low. We see lack of intermediaries and other players who have both expertise in finance and impact. And also developing consensus and tools and market infrastructure for impact management still needs to be challenged. So maybe in the future, our strategy is that we do more professional development support for investors, intermediaries, more emphasis on innovative financial schemes with high additionality. And we would like to further develop impact management principles and tools. Thank you very much.
So will we move through to Daniel?
Thanks, Ruth. Maybe if you could jump to the next slide. Yep. So good afternoon, everybody. I'm going to talk about a few things. So firstly, I might just briefly introduce Impact Investment Group, or IIG, as we like to call ourselves. I'm going to spend a little bit of time talking about sort of why impact investing, and maybe cover some areas that Fumi didn't, so that I don't double up on some of the great content that Fumi has already covered. And then lastly, I'll also just provide a bit of a case study of one of our funds. So next slide, please. So Impact Investment Group is a funds management business. I'll give you a few stats on sort of our size and our approach in a moment. Next slide, please. Probably the most important thing is the areas that we work across. So currently our business works across 3 asset classes. We are in real estate, we are in renewable energy, and we have Australia's first venture capital impact fund. So where the impact comes into each of these areas is each area has a different focus. So for us, our real estate transactions follow one of 2 impact themes. The first theme is sustainability. So what we're aiming to do is push the boundaries of what it means, what sustainability means in real estate. I think if you go back 5 years, 10 years, buying a building and putting some solar panels on the roof was probably pretty cutting edge. That does not qualify as cutting edge today. So really what we see our mission as being is trying to push where that edge is and set new benchmarks for what sustainability means, and ideally influence the market to have to keep pace with that new benchmark. And to give you an example of that, last year we built what we believe at the time was the world's tallest timber office building. So it was a 10-story cross-laminated timber building in Brisbane. Use of the cross-laminated timber is 40% less carbon intensive than concrete and steel. And there's a whole range of sort of research around, or emerging research around health benefits of working in buildings that are made from natural timbers. And so you can, if you want some more information about that, you can see it on our website, or there's a great little clip The Economist did that you can find on YouTube about timber buildings going forward. The second impact area for us in our real estate business is co-design with communities. So often we've increasingly been involved in developments or redevelopments of precincts. And I think one of the things that we're always very conscious of is coming into a community and developing a precinct in a way that actually doesn't support what the community wants to see in their community. So what we've started to do with our latest asset is actually we spent a whole year in co-design with the community to understand what they wanted that site to be used for, and how we might, whilst we are aiming for a strong return for our investors, also deliver something to the community that actually supported or supports the vibrancy of that community. The second area we work in is renewable energy. That's pretty straightforward. We build and operate and manage solar farms around Australia in two funds that we have. So we have a solar income fund and a solar asset fund. And I'll talk a little bit about the solar asset fund later on as my case study. And thirdly and lastly, we have a venture capital fund called Giant Leap. It's Australia's first impact VC fund. We are aiming to compete with all the other venture capital funds in the market in terms of returns, but we want to demonstrate that you can do that and have a positive social and environmental impact at the same time. So we target three impact areas through that fund. The themes are sustainable living, empowering people, and health and well-being. And all of the startups that we invest in, and we're investing at a pretty early stage in those startups, have to be need a business model in one of those three areas that's contributing positively from an impact perspective. Next slide, please. Just to touch on, we are aiming to build out those areas. So currently we're in three asset classes. We would like to stretch into a couple of more asset classes. These for us were first because it enabled us to build scale and build a funds management business in this, I guess, the most efficient way possible. So a bit about our business: we've got about 500 investors. Depending on which day you count the assets and at what stage of development, sort of between $600 to $800 million worth of assets under management. And we're about 30 staff across Melbourne and Sydney. Next slide, please. I always like to think maybe, often there's a conversation about why would you do impact investing. I actually think the more interesting question is, why has impact investing emerged at all? Like, why is this a thing? Why is it something that has captured people's attention? To Fumi's slide, why is it a market that is growing so quickly? I think there's probably two possible answers to that. The first answer is that there are some big challenges that we face globally and locally, both in environmental sense and also many social issues that we are challenged by. And I think that people that care about solving those issues are always looking for new tools and building out new toolkits that they can bring to help solve those issues. And I think we have some really well-established toolkits. So there's well-established toolkits in government around how you tackle social and environmental issues. There's well-established toolkits and always improving toolkits in the philanthropic community about how you tackle social and environmental issues. And I think over the last decade and more, even corporates through their CSR programs have developed a range of tools to tackle social and environmental problems. And I think this is just the investment community, or at least investors, thinking about how they can use their investment capital to tackle those same social and environmental problems. I think in addition to that, there's a growing, or over the last 20 years has been a growing mistrust of the mainstream financial system. And I think all of those things combined have probably have been the drivers of the emergence of this as a field or as an investment philosophy. So that's the first answer. I think the second answer is that the first answer is just a nice story and no one really knows why it's emerged, and no one really knows how big it will get or how impactful it will be. And I think that is, if people hold that to be the true answer, that's probably at this point just as legitimate as the first answer. I think if you don't want to do too much work, you can believe whichever of those two answers makes you feel most comfortable. I think if you want to figure out the truth for yourself, then it requires doing a bit of homework and a bit of research, and still you may land on answer 1 or 2. I think it's fair to say I'm definitely firmly in the answer 1 camp. So next slide, please. I think also with impact investing, what's happening is, as this field emerged, we're getting better at understanding how we might define impact, also how we might define the problems that investment capital can contribute to solving, because investment capital can't be used in the same way that some of those other toolkits can be used. Can't be used, in the same way as a grant can be used or as government funds can be used. It is a different tool. So understanding those things and understanding the uses of capital is something else that's emerging in this field. I think what's happening is people are starting to get better as well around converging on common ways of thinking about things. And I put here the SDGs as one framework that is becoming increasingly adopted across impact investment, the impact investment community. For us at Impact Investment Group, we look at impact at 3 levels. So we look at the asset levels and think about the individual metrics or impact data that we want to collect on an actual asset. We then at the next level up use the impact management project. So if any of you want to Google that, that provides a framework across 5 dimensions around how to bring some common language to impact, so you can start to compare different types of investments and products in the portfolio. And then we also roll our assets up to point towards the SDGs that are relevant to any portfolio, any fund or asset that we're managing. Next slide, please. I always, given the audience here, one thing I always like to point towards is, why is this relevant to particularly a philanthropic audience? I think for many of you on the webinar, you will have a foundation with an endowment or a corpus, and you are already driving social and environmental outcomes through your granting activity. As Fumi pointed out, you can also drive investment outcomes through program-related investment, which is a really effective tool that's also emerged. Behind that, there's also an opportunity to put to work often a very large, relative to the grants, a large amount of capital. And in many cases, if you're giving away approximately 5% of your grants of your endowment each year, you've got sort of 20 times that amount sitting in an endowment that could be used for social and environmental change. Now, obviously, that endowment cannot be used in the same way as grants. It needs to be used in a different way, which is where impact investing comes in. And I think what's captured many people's attention is it doesn't seem to make a lot of sense that on one hand, you may be driving a particular social or environmental change with your granting activity, but at the same time, you may have your portfolio invested in companies or funds that may actually be part of solving or of contributing to the problems you're trying to solve with your grants. That doesn't seem to be a very sensible approach, and I think that's one of the reasons why it's captured, captured people's thinking. Next slide, please. So this is just one of the funds that that we run. I didn't choose it for any particular reason other than it's one of the only thing. Well, it's actually the only fund we have open at the moment. Whenever I do a webinar and I use one that's closed, I often get people wanting to talk about investing in it, and then I have to tell them, sorry, you can't do that. So I've used the only one that we've got open, and that's the only reason I've selected this one. This is our solar asset fund. We launched it middle of last year. It is investing in solar farms around Australia. So it has 3 solar farms that it's invested in. We're targeting what we consider to be commercial rates of return. So it's sort of a 10% IRR target, and we're tracking to that so far. And all of the assets are performing so far in line with what we've expected them to. What I've also done here is just pointed towards how we map these to the SDGs. So this is one way in which we can start to point towards a common set of measures or goals that impact investors can kind of rally around. Next slide, please. And what I've also provided here, just as an example of how we map down at the asset level metrics, is how we capture data around some of the key metrics we've identified that an impact for us as a manager, firstly, but also secondly, our impact investors are interested in seeing in terms of the performance of their investment. So not only are they obviously interested in the performance financially of the investment, but they are also, for many of our investors, equally interested in the performance of the impact that investment is having. So this is just an example of how we outlined that in the investment documentation. Next slide, please. And that's it for me. So I think we've got contact details there if anyone needs them, but otherwise, Ruth, I'll hand over to you for question time.
Thank you, Daniel and Fumi. Well, we do have some questions, and the first one the first question says, these stats are excellent. Any chance we can get access or a copy of them? Yes, the answer is yes. The statistics we used at the start of this presentation are included in an AVPN and Oliver Wyman report, Driving ESG Investing in Asia, the Imperative for Growth. You can find that on the AVPN website. And this deck will be posted to AVPN's, this webinar will be posted to AVPN's website soon, so you will be able to refresh your memory about that. Okay, our next question is for Fumi. If you are not investing from your endowment at the moment, will you be investing from the dormant bank account funding? What, quite a long question. What levels of investment do you plan to make each year? Fumi?
Yes, thank you very much for the question. So we have very limited amount for our endowment because our focus, as I said, is to do impact investing from our program asset. And so the question about whether we are planning to utilize dormant account fund, at this point, we haven't really decided yet. But personally, I think it's a great resource that we can utilize. I think it's a resource that can be used to also try to stimulate the impact investing market in Japan. So if there's any chance, then we would like to utilize it, but we're still waiting for the government to issue the application guideline. So we'll see. What level of investment that we would like to make, I'm not really sure in what terms. By saying level, we would like to make as many levels, many investments as possible. But how should I say? For us, it's not necessarily only about the numbers of investments that we make or the scale of investment that we're making. We are more focused on demonstrating new investment models. So and we invite other players to make impact investments. So that's what we are focused on right now. Thank you.
Thanks, Fumi. So the next question, is your impact investment fund more of a VC or a PE fund? Which stage of the company life cycle will your fund consider? Who would like to take a first crack at that?
I can have a first go if you like. So for
Sure.
our venture capital fund, the IRG fund, so we are investing basically. It is definitely venture capital. It's not private equity. So we are, I would say, pre-Series A. For those of you that are familiar with VC terms, it basically means we're investing in companies that have revenue and have a pathway to profitability, but are still very early in their journey as a company. They're still quite early stage companies, and we would invest on average 500,000 Australian dollars, which I think is about 350,000 US dollars. That would be our average kind of investment into one of those companies.
Thank you. Fumi, do you have anything to add?
Yes, so for our fund that I introduced, my second case also is the VC fund. So we focus on ventures from early stage to middle to late growth stage and late stage. So we don't really invest in seed stage.
Mm-hmm. Mm-hmm. Thank you. So we have another question. Where can we get more information about social impact bonds issued in Japan?
Okay, I guess that's for me.
Yes.
So
I can try my best, Fumi, but I don't think I'll do it as much.
So I think there are a couple of resources available. There's a company called K3, which has a database on their website. They do lots of SIB's intermediary work. And also we're right now compiling a report about SIBs in Japan. We wanted to reflect on what has been going on in Japan and then take out some lessons learned and then utilize it for further market development. So hopefully we'll be able to issue this report soon in a month or so.
And Fumi, can I ask, will there be an English translation?
I think if there's a need, we will translate into English and we'll publish it through our website.
Ruth,
I'm sure there will be.
It's not specific to SIBs in Japan, and I must confess I haven't checked it for probably a year or two, but there used to be a website called Instiglio, which had a map of all the SIBs globally and what impact areas they were. So it was a neat little tool that they used to publish or keep updated on a website, which showed all of the SIBs that have been launched globally.
And Johnny, what was Could you
I think
spell that
social
again,
finance
please?
had.
Yeah, the website's called Instiglio, so it's INSTIGLIO.
Thank you. So we have another question. May I ask each presenter the same question? Is there pro bono or skill-based professional volunteering? Is there any aspect of that in impact investing?
Daniel, would you like to go first?
You go first. I'll happily follow you.
Okay. I think there can be. So, for instance, we make direct investments to impact investing intermediaries, and we try to seek different resources through pro bono volunteering as well. For instance, we sometimes need some people to do research on business sectors, and we need some business consultants, or there are various skills, expertise necessary. So sometimes we do seek pro bono volunteers.
Yeah, I would, in my experience, I completely agree with Fumi. I'd also add, I think there's many different groups that are trying to explore impact investing, and many of them are resource constrained. So, you're probably not as many volunteer opportunities in a mainstream large financial services organization that might be investing or creating product. But there's probably, there's many non-profit organizations that are trying to figure out, do I have a social impact bond, or do I have something that could be a program that could be a social impact bond, or a social enterprise that needs some help thinking around, well, how could maybe they need help with building a financial model, or assistance in thinking about, well, could I use investment, and how would I use investment? So I think there's there often is volunteering opportunities, but it tends to be with those that are trying to explore this space and have resource constraints.
Okay, well then we just have a very nice compliment for the two of you. Excellent presentations, clear about who they are, history, case studies, and advice for others. So thank you, whoever presented that. And our next question is, how specifically does impact investing relate to ESG? What is the link between the S and is this a proposed way for the S in the ESG? I think it's talking about the link between impact investing and the S in ESG.
I'm happy to take that one if you like.
Yeah, sure, go ahead.
So I would probably say there's two ways you could think about that. One is to think about ESG, and this is a very broad statement, but if you think about the philosophy behind ESG, or responsible investing, or ethical investing, which are similar terms, they're often screens or filters where you are trying to reduce the investable universe. You're trying to screen out things that have a negative impact. So it's really more about what not to do. How do I get rid of the things that are causing harm, basically? So that tends to be the sort of underlying approach to ESG, responsible or ethical investing, which is, I would say, often some of the best ways to resolve problems is to stop doing the things that are causing the problems. So I'm a big fan of ESG and responsible investing. Impact investing, on the other hand, is about how do you put capital into things that are doing positive. So it's not about what not to do. It's about what do I do if I want to have a positive impact. So that'd be one way to think about it. I think the other way to think about it could be, if you think about concentric circles and saying, there's all the investments in the whole world that I could make. I could screen out those that are negative, and that would reduce that universe down. And then with those that are left, I could then focus again on those things that are positive. So they would be a subset again of that of that universe.
Thank you, Daniel. This next question is for you too. Can you share what you have observed about the motivations of the individuals behind a family fund that is making impact or sustainable investing a priority?
Yeah, that's a good question.
It is a good question.
Hopefully I'm taking it in the right context in terms of focusing on. I assume it's about sort of intergenerational wealth. Is that right? So like a family and why is a family?
Yeah. So the motivations of the people, of the individuals involved in a family fund that is committed to making impact and sustainable investments.
So I think there's probably a few. Look, there could be many reasons, to be honest, but I pull out a few that I've seen as most common. I think Fumi touched on one, which is a different way of thinking. So those that are inheriting wealth today often have quite a different way of thinking about the world and don't really separate their social goals from their investment goals. Like those, they're all kind of mixed in together. And investing either to do no harm or to have a positive impact is like not even like it's a no-brainer for them. They're not even thinking that, like, to them it's like, well, why would I not do that? There's no reason why I wouldn't do that. And I think so. Firstly, there's a transition of wealth that's happening both to millennials and for the first time in Western history, half of the money is being inherited by women. And women also think quite differently about how they want to invest, and are also much more inclined to invest in line with their values. So those are two, I guess, big trends that are underpinning it happening. Impact investment generally. I think some other themes that we're seeing are it's a great way for families to engage, and often for parents to get their children engaged with the family wealth. Because often the kids find the whole concept pretty boring. But the minute you're talking about, you introduce values and you introduce social and environmental change, these are things that the next generation are much more inclined to want to engage with, get more passionate about and excited about. So it's often a way for the families to engage that next generation in building financial skills and investment skills, which they may not want to do if it's just about, balance sheets and profit and loss. And I think, thirdly, for many families, they already are thinking or having those conversations because they're doing it through their foundations or through their philanthropic activities. And this is just becoming a natural extension to that because the families have often already done the work to understand what they care about or what their family wants to support in their communities. And this is just another way for them to extend their thinking, their support, and build out another toolkit to drive or support the change they're interested in.
Thank you. Look, our last question was one of our participants asking if they are going to be able to listen to this, to the questions and your responses after this session, and the answer is yes, because the webinar will be posted to AVPN's site next week, so you will be able to hear Fumi and Daniel's responses to some of the questions that have been raised today on that. So look, I think that's bringing us to the end of our time together today. I would like, on behalf of AVPN and all of those listening today, to thank you, Fumi and Daniel, for an informative and very stimulating presentation. I'm going to be looking up that Insiglio website for sure. We'll post the webinar next week. Look out for it. And before I leave, may I remind everyone that tickets for this year's AVPN conference, 25 to 28th of June in Singapore, are selling fast. So register for yours today. Again, thank you to our presenters, and goodbye and good night. Thank you.
Thanks all.
Thank you very much.